Hi, everybody. It's Kristen Williams with the Williams team, Austin, Texas, here for our weekly update on the real estate market. And this week, I was fortunate enough to attend Mega Camp, which is the Keller Williams National Convention that we do every summer. And so Gary Keller was able to talk to us a bit about what's going on in the market, what's going on economically, globally, what's going on in the national real estate market. So what I figured I would share with you guys is a couple of those nuggets. So number one, interest rates. Interest rates have been historically low for a really long time. He put together a chart that dates back to the 70s. And if you look at interest rates historically, all the way back to the 70s, the average interest rate was right under 8% for the past 40 years, basically. Interest rates have been in that like high sevens, like 7.97%, I believe is the rate. And then since 1992, historically dating back since 1992, the average interest rate is 5.87. So we've been very, very fortunate over the last few years to experience rates below 2, 3, 4%. But historically speaking, that is not a normal rate. And so he wants us to, I know a lot of us talk about, oh, interest rates, they're going to go down. Well, he and a lot of people don't believe that they will be going down. They're probably here to stay in that 5 to 6% range. They may get higher than that, but historically speaking, we're still under the rates that are historically average since dating back to 1992. So he said, forget that rates that low ever existed. Don't make moves or not make moves based on that interest rate. You can refinance if they go lower, but just forget about rates being that low because they were inflated. The market and the economy, they were doing their very best to stimulate people making moves and buying, and it worked. But at that point, it's time to raise the interest rate. So there's been discussion over that for years and years. I know that oftentimes I'll be counseling people and say, well, interest rates are supposed to go up, and they just never really did. And now they did, and now they're here to stay. And so Gary just wants us to keep that in mind, that from a historical perspective, rates are really not too bad. And then, supply, demand, inventory, pricing. We are in he likes to look at this trend line of the national average sales price. And so over the back in 2002 to 2007, the prices of houses, the average price of homes across the country was above what this like kind of general trend line looked like. And then after, the Great Recession hit, we were below that trend line for about 12 years. And in the past 2.5 years, we bumped up above that trend line, meaning the average sales price that homes are selling for across the country is higher than this like trend line. That's just kind of the shows a healthy appreciation. So we're probably going to spend some years below that trend line, but in his because we didn't spend very many years above that trend line, his expectation is we're probably going to spend 2 to 3 years. But the interesting thing to look at is the last time we, we're above the trend line and then went below the trend line, we were only below that trend line for like a year, and it didn't really go down a whole lot. And then it started to rise about 2 to 3 years after that. And so kind of the same thing, people are saying, oh, I'm going to wait, or prices are going to go down. They might go down a little bit, but generally speaking, they're not going to go down a lot. They're right now in the United States, more people are employed. Economy or incomes are higher than ever before. Most states, a lot of states, specifically Texas, has a really strong economy just in general, with businesses coming to Austin or coming to Texas, but coming to Austin specifically. So don't count, his advice was don't count on interest rates going down again, and don't count on prices going down. There's probably going to be there is going to be a market correction, and that's happening right now. And so we're seeing that, and I'm seeing that in real time too, with the number of price reductions we're having in the Austin market. But after those price reductions and that inventory kind of settles and buyers start to make those moves again, we're probably going to start to see a pretty healthy, strong, robust market. And that's what economist Mark Sprague said a couple of weeks ago when I visited with him in the market update too. So that's kind of where we are at. If you have any questions or want to geek out on any of this with me, please let me know. I spent some time studying the slides and the graphs that he shared, and did a little story on Instagram. Love kind of watching the numbers and trends, which is why I do this market video for you guys every week. But if you have any questions, feel free to reach out, and I hope you guys have a wonderful weekend.